Something is happening with Shiba Inu that whales have already acted on. The signal is subtle, but the implications are massive. If you're waiting for confirmation, you might already be too late. A critical test is unfolding right now, and the silent move could change everything for holders. This content is provided for informational purposes only and should not be considered financial advice. Market conditions can change over time. The broader cryptocurrency market is currently navigating through a period of intense volatility and uncertainty. As we enter the second month of 2026, the optimism that characterized the start of the year has been replaced by a more cautious and defensive sentiment. This shift in market mood is largely driven by the recent performance of major assets. Bitcoin, the market leader, has recently dropped below the critical $80,000 mark, currently trading near $78,712. This downward move has sent ripples throughout the entire ecosystem, affecting even the most resilient altcoins. Ethereum is also feeling the pressure, struggling to maintain its position near $3,200. According to reports, this instability has opened up the possibility of a further downslide across the board. For Shiba Inu, which has spent the last several weeks in a consolidation phase, this external pressure has proven to be a significant headwind. The market sentiment, as measured by the Fear and Greed Index, has plummeted to a score of 14, indicating extreme fear among investors. This defensive posture means that buyers are reluctant to intervene forcefully at current levels, leaving assets vulnerable to further declines. The global crypto market cap has also seen a significant reduction, facing a $2.58 billion crash in a very short period. This context is essential for understanding why the current price action of Shiba Inu is so critical for its short-term future. The main development shaking the Shiba Inu community is what analysts are calling the worst price nosedive of 2026. After weeks of holding steady and building what many hoped was a solid base, the price structure has suffered a severe breakdown. This move has erased all the expectations for a quick bullish recovery that were built during the stabilization at the beginning of January. As per the latest updates, this breakdown has pushed Shiba Inu into a deep bearish structure that hasn't been seen in months. The asset is currently trading at 685 units, representing a significant drop from its previous resistance levels. This nosedive was not a slow decline, but a sharp move that caught many retail traders off guard. The intensity of the selling pressure has been so high that it essentially ended the possibility of a proper recovery in the immediate term. Every attempt by bulls to bounce back has been met with heavy resistance, turning previous support levels into new barriers. This development is particularly alarming because it happened while many were looking forward to a breakout to the upside. Instead, the market chose a different path, forcing holders to re-evaluate their positions. The rejection of every bounce suggests that the market is currently dominated by sellers who are eager to exit their positions at any sign of a minor recovery. This has created a cycle of lower highs and lower lows that is difficult to break without a major shift in market fundamentals. The technical data and on-chain metrics provide a clearer picture of the forces at work behind this price action. According to on-chain data, whales have recently offloaded approximately 32 billion tokens. This massive dump by large holders has put immense pressure on the price, contributing significantly to the current downtrend. Furthermore, indicators show that over 26.47 billion tokens entered exchanges around January 25th, which was a clear early warning sign of the bearish sentiment that was building. When tokens move onto exchanges in such large quantities, it usually precedes a period of selling. In addition to whale movement, the burn rate for Shiba Inu has seen a dramatic shift. As noted by supply metrics, the burn rate recently crashed to zero in a 24-hour period. This lack of supply reduction has removed one of the key psychological supports for the asset. On the technical side, the 4-hour chart signals a bearish structure with price action remaining capped beneath key resistance levels. The volume spikes during the recent decline suggest panic selling rather than methodical profit taking. As per recent analysis, Open interest is also declining, which points to a lack of conviction among traders to open new long positions. All these numbers combined paint a picture of an asset that is currently struggling to find a floor amidst a wave of selling from both large and small participants. Analyzing these developments, it is clear that Shiba Inu is entering one of its most challenging market periods of 2026. The breakdown below important moving averages is especially troubling because these levels, which previously functioned as dynamic support, have now turned into resistance. Experts note that the current behavior indicates that bullish momentum has mostly vanished. The meme token is under tremendous selling pressure, and the market structure shows no immediate indication of stabilizing. The fact that whales are choosing to dump such large amounts of tokens suggests that they may be anticipating further weakness in the broader market or a lack of upcoming catalysts for Shiba Inu specifically. The crash in the burn rate to zero is also a significant factor, as it affects the long-term supply dynamics that many investors rely on for their bullish thesis. Without the constant reduction in supply, the price is purely dependent on demand, which is currently very low. The extreme fear in the market, reflected in the Fear and Greed Index score of 14, means that even good news might be ignored as investors prioritize safety over potential gains. Analysts suggest that the likelihood of a prolonged decline is high unless the token is able to swiftly regain lost support levels, which at this point seems improbable. The general weakness of the cryptocurrency market, led by Bitcoin's struggle below $80,000, is increasing the pressure on all altcoins, but Shiba Inu's specific metrics make it particularly vulnerable. The lack of institutional interest and the reliance on retail sentiment, which is currently at a low point, further complicates the recovery scenario. Looking ahead to the next 1 to 4 weeks, the outlook for Shiba Inu remains cautious. In a bearish scenario, if the current selling pressure continues and the broader market fails to recover, we could see Shiba Inu testing even lower support levels, possibly dropping toward the 600 unit mark. This would happen if Bitcoin continues its descent toward the $70,000 range, dragging the rest of the market with it. On the other hand, a more balanced or slightly bullish scenario would involve Shiba Inu finding a stable floor around the 650 unit level and entering a new period of consolidation. For a real recovery to begin, the asset would need to break back above the 750 unit resistance and see a resurgence in whale accumulation and a spike in the burn rate. However, given the current data, a sideways movement seems more likely than a sharp V-shaped recovery. The next 48 hours will be crucial in determining if the current support can hold or if we are in for another leg down. Investors should watch the exchange inflow metrics closely, as another surge in tokens entering exchanges could signal more selling on the horizon. The market is at a crossroads, and the next move will define the trend for the rest of the quarter. What is your target for Shiba Inu in the coming weeks? Do you see this as a buying opportunity or a signal to stay away? The situation for Shiba Inu is developing rapidly, and staying informed is more important than ever. While the current data is challenging, the crypto market is known for its surprises. Thank you for watching this deep dive into the latest market moves. Make sure to subscribe for more urgent updates and leave your thoughts in the comments below.